Exciting. Today they're going to make a decision in 20 minutes, 15 minutes. All right, microphone's on. Yeah. All right, let me get my chat over here. All right, yes, we are live. And it should get exciting here very soon. The Fed's going to come out and do something crazy. All right, so traders, we've got 14 minutes before the Fed makes a decision. The decision is supposed to make the markets go lower. If somehow Jerome Powell has any rhetoric at all, I mean anything, if he hints towards we will actually start raising less going forward, the bottom is in and we will explode. It's not what I'm expecting, right? I'm expecting Powell to say it's all data driven. We'll figure it out when we see the next set of data come in. And we don't know what we're doing. We're in rate raise mode. We'll see what we're going to do when the data comes in. If he says that, then we just continue lower. So, very important. It's very important to know or to listen to what he says in his press conference. That's really the big thing here. Everything right now hinges upon what Powell says at the press conference, at least in my opinion. So we have 13 minutes to go. I think it's going to really become volatile because we're at a pinnacle now. We're at a pinnacle where you can tell that the opinion out there is of such that they think the Fed's going to start tapering. Well, I should say, the Fed is going to start backing off a little bit or tapering their raises, their rate increases from 75 to 50 to 25. There's many people out there that think that that is something that Powell will say. And if that's the truth, the bottom sure would be in. But I think Powell's going to stick to what he knows works best, and that is to just call it data driven. We'll let the data tell us what to do next. We do know, as far as we can see, the setup is there for the market to go lower, right? You've got bonds that look like this, literally telling us that they've reached the pinnacle and they've had their rally into the Fed meeting. Bonds have rallied. Now they're at resistance. They're at that average where they usually drop. That looks pretty set up, like I showed you in last night's video. I think that's a Wall Street setup because each time we get up here, there is a kiss of death in bonds. And of course, if we look at this one, let's go to a Dow and we'll go to a daily chart. And if we drop the 200 bar average in where it belongs, look at what we are at right now. Looks to me like that's a setup, like I mentioned in last night's video. Rally all the way up till the Fed meeting, hit the resistance like it always does, hits the 200 bar moving average. So the Fed's going to speak in a few moments, and we're going to find out if that was a setup or not, just like that. So we'll see very shortly, kids. All right. So I don't know if anyone has any positions on, but I'd be very careful. Yes, crude has been strong. Well, the dollar started off lower, right? Then it finally gained some footing. All right. So we'll just hang out and wait and see what's going to happen. There is nobody in the YouTube chat room. Is there something wrong with it? Can you go in the YouTube chat room, Dano? Because I don't see anybody in there. Okay, fast. Very good. Okay. Thank you for tuning in. Just wanted to make sure that we had people watching. And of course, we will watch when the fireworks start. Test has been passed. And so again, bond should drop. S&P should drop. Now, we don't know for the first 45 minutes what's going to happen. Usually the markets just flip around. Eventually, 45 minutes to an hour after a Fed meeting, you get your direction. But today we have a conference, right? So that throws the whole thing out the window because he's going to be speaking for a while. Matthew, you're short bonds. I think you're going to be just fine being short bonds. So, I mean, of course, the charts aren't always right, but usually they're kind of foretelling. They tell you what's going to happen before the market gets there, before the news comes out, I should say. Is the background noise too loud? Background TV? Anybody? Let me know if that's too loud. Young, all meetings end at 2 or 2:30. Okay, you don't hear it. Good. So all meetings are usually around 2 to 2:30. That was to you, Young, in the OMNI trading room. You guys don't hear that in the background. Good. Because then YouTube will copyright me. I won't be able to put out videos. All right, 7 minutes. Now, I'm not looking at my quote board because I have it covered with the things on the screen that you guys are looking at right now. But it's not like me to not have a quote board in front of me. Let me at least put one up over on this screen. Gotta have quotes somewhere. There we go. At least now I can see what's going on. It's not my favorite quote screen, but it's got quotes. It's good. So I know the traders in my OMNI trading room are likely not in any positions. We actually did a great job buying soybeans on the lows this morning, rallied up, took our profits, stayed away from the other markets. So I'm assuming my Omniacs don't have any positions on. Does anyone on YouTube, in the YouTube chat room, do any of you have positions on right now? If so, share them with me and we'll keep an eye on it for you. No positions. Short Bitcoin. I have nothing to say there. I can't agree. I can't agree with you. Just not long term. I can absolutely agree with you short term. I think short Bitcoin is probably smart, to be honest with you, Big House. William is short Russell. Good for you. You should be. Excuse me for that little throat clearing thing. You are long AMD. Well, AMD's got a nice look to it, John. Of other charts, AMD looks much better than some of the other charts. I think the Fed should do 75 basis points like they said and don't say a word about what comes next. That would keep everything on an even keel. Anything other than that, short US 30, very nice. Anything other than that's going to be a big problem. Powell has the power today in his press conference to make this market just continue resetting, which it needs, or to explode it, which it doesn't need. We don't need that yet. We got to finish what we started, all right? Let's get this finished. The tapering, the pullback, the evening of things that have gone too crazy before we send it back up again. You know what I'm saying? More important that we get that done than send this back up. Sending it up keeps us in the same spot we were in. It's overdone. It's overbaked. You know what I mean? We need it to come down a little bit. So I'd prefer that Powell just stays firm, election, no election. It's got nothing to do with what I'm doing. I am trying to fix an issue before it gets bad, and I'm going to continue raising rates until that issue is fixed. You can vote for anybody who you please. It has nothing to do with my decisions. I hope that's what we get. I hope that's what we get. 4 minutes. Now, if you're short bonds, if you're short RT, because that's what I saw in the YouTube chat room, when the rate hike comes out, go like this. Don't look. Don't look at your equity. Don't look at a chart. Just don't look at your position. Watch everything else. Don't look at your position. Wait. Let the smoke clear. Come back and look at it 45 minutes, an hour later. Because any decisions that you make during the first 45 minutes to an hour are usually emotionally charged decisions that are being made all over the world at that moment in time. And most banks sit around a little while and do some planning. Takes them an hour. They plan, then they go in, you know? So sit tight and don't do anything in the beginning. Mm-hmm. Does anyone have any guesstimates on what's going to happen? Me, I think 75 basis points and he shuts up. But that doesn't mean that's what's going to happen. 100, that'd be too much. That'd scare everybody. Now, 100 would mean the Fed has seen something far worse than what we've been dealing with in the future, and they're going to tackle it. So that means you're short bonds, huh, Sun King? I hope they don't do a 50. Well, let me not say that, because the market will go up, which is good. But I think if they do a 50, it gives us the wrong impression. It gives us an impression that the Fed's done fixing our issues. I don't know that we're there yet. I hope it's data dependent. That's what we can hope for. The Fed's not going to fix any of our personal issues, I promise you. Don't count on it, Dano. The Fed is not going to fix your personal issues. Powell might be good, he's not that good. One minute. Powell, be smart. You have a minute. First, you got to release what you're going to release, and then in a half an hour, be smart, please. Say the right things. Don't blow this thing up. All right, my board's gone crazy, so obviously some news came out somewhere. My board is just lit up like a Christmas tree. Bonds just went from 120, 122 to 120, 28. Damn. Now remember, you don't know what any of this means. You gotta leave this alone for now. So they raised 75. The rhetoric is what's important, and S&P is rallying. Nice. Look at my board lighting up, huh? That was just to let me know we were back into the 70s in the S&P. Look at my board lighting up. How pretty is that? New highs S&P.
What do you think's gonna happen when you
they raise rates?
It happens already?
Yeah.
They rate. Well, who thought they wouldn't raise rates?
Of course, we expected them. It's what Powell's going to say after.
Oh.
So literally, well, let's go look at the chart. Let's see what it looks like. Bonds didn't do anything. S&P, a little bit of a bar here. Nothing too crazy yet. We'll get rid of some of this now, just to get it out of the way. Let's go look at the Russell. What did the Russ just do here on that downward sweep? Really nothing there yet. Dow. Transportation. So I'm doing this for me, kids. I'm just looking through some stuff. Alright. Nothing crazy going on. So, literally, we get to go back to this chart now. Now that we got the Fed thing out of the way, the next big thing is, will we stay above the 200 and keep on going? And, of course, will we get above this resistance area? All right, that's the next thing, hurdle, if we start to go up. That's the next thing for us to look at. And that's a lot from here, man. That's 4,000, 4,100. E-mini S&P. So let's see what this thing wants to do. Remember, we really don't know yet. It's going to move around. It's going to do a lot of stuff for the first hour, and then it's going to get into a groove and show us what's going on. See, they're saying that on TV right now, too. Today's press conference is so important. I agree. We don't really know what to think yet until Powell gives us some forward guidance. So we got up to 99, 38.99 S&P, 1144. You know what? Where's my homework? Oh, I put it on the stairs. Let me grab my homework because I had a level for us to watch in NASDAQ that if it got to it, it's probably a short. Let me go pull my homework. Let's see what this says because I think we might have gotten to it. 11,467. What's the high? 11,440. All right. So this basically told me. Here, let me take care of this camera. White balance. So my homework basically said. What times bonds are closing? That's all that is. My homework said if we see this level in, well, hold on, in NASDAQ, that you can short it 11,467. And you would add at 11, well, forget about that. 11,467 with a stop at 11,633. So I think the high is 11,440. So it got into a resistance zone and whoosh, right back down. Because right now, if you look at NASDAQ, it is trading at 11,402. It hit 11,440, never got to 11,467, which is what we were discussing. And what we did today, the only trade we did was we bought bonds at 1432. The low, excuse me, we bought soybeans at 1432. The low being 1431. How about that? That was a great buy. And now, as I mentioned, you got to wait. You gotta wait good 45 minutes. We don't know what's going to happen here. So now we wait. I think Powell will be smart, and when he speaks, he'll say that nothing has changed yet, and the markets will continue to melt down a little bit. I don't think we're ready to go right back up yet. It's barely come down. But there's a press conference, and that's the important thing today. What did the dollar do? Dollar. That board's too small. It doesn't show it to me. Let me go back to that for a minute. Where is dollar making new lows? Interesting. Dollar making new lows. That means the dollar must know that Powell's going to say something about not raising rates as much. New high S&P. Near the highs in Rust. New high transportation average. New high silver. Gold just made a new high. Bonds made a high. Although bonds just went into their resistance area. It didn't really go anywhere. Crude made a new high. Well, dollar down, forcing all the other boats higher again. Again, none of this matters, I promise you. What we're looking at now is an illusion. We don't know what it's going to do for another 40 minutes. I think exactly what I thought yesterday. You just got to wait a little bit. So, the way things change so rapidly, look at this. I'm going to erase this long trend line just for a moment. The way things change so quickly in analysis, imagine if what we're starting to see here now is a bull flag building. Right? Could be, right? That's how quick things change in our landscape, especially if Powell says something bullish. Look at that. Crazy, right? So we'll see. It's so Powell data driven today, more so than you might imagine. And I think there's a pretty acute, pretty ES chart to that. There's a pretty NASDAQ chart on one of these. I don't know if it's here or if it's here. I got a pretty NASDAQ chart somewhere. Maybe it's here. That wasn't it. Maybe it's here. This is probably a better one to look at. What has it done since it's gotten out of this channel? Since coming out of the channel, what do we see? So let's get rid of the flag, even though it worked really well. And let's look at, is this what's happening right now? Not quite, it's not quite that. Is this what's happening right now? Maybe. YM, what are you doing for us, YM? That YM now, that's a different look, right? You look at YM, it's got a completely different look to it. That is a bull flag on YM. So, what do you want to call that? At the 200 ball moving average, no less. Huh. That's interesting. I told you can't tell for the first 45 minutes to an hour. It's all an illusion. I wouldn't even consider thinking what's going on there. I was just hoping to see NASDAQ get into that sell level. I might have been brave enough to offer it to you cats, but it didn't get there. I did show it to you in the camera, of course. So when's the press conference? Does anyone have a link to it? That is more important than anything else that we are doing at the moment. Oh, it was a statement? No press conference? Oh, thank God. There's no press conference and we're okay. But there was a press conference today. It's live on YT, huh? Let's go find it. They are at 2 o'clock. 2:30, right? Or is it 2:15 today? It could be 2:15. Ah, thank you. Thank you, Thank you, Ahmed. That's the link I needed. Fed live feed. Thank you. I'll leave it on silent until they show up. So this is what I'll be watching when the time comes. It's actually on now, but we don't need to sit here and wait. All right. I'll mute it and I'll wait for us. Well, I knew. I read the papers this weekend. I knew we had a press conference coming. I think I even mentioned it in my video last night. And generally, you don't hear anything from me that's not researched and fact checked. So I kind of knew I was right. I don't just make stuff up.
Fed signals ongoing rate increase.
Good. That's what they need to say. Powell says we're going to continue to raise rates till we think we've hit the appropriate level. Everything will be okay. So we have 15 minutes till the press conference, right? All right. Not much we'll do until then, obviously. Have I ever shown you how cool this system is? I helped develop this, especially this quote board of all things. So with this, I literally, if I wanted to know, let's say you don't know anything about soy meal or bean oil, you can get your instrument details. Well, let's not do that. ZLZ. Well, you can get your instrument details. You can place an order, buy or sell as many contracts as you want. You can change it to a limit. I mean, just one click. It's the coolest platform I've ever used. And if you don't know about a contract, you can say instrument details, and it will tell you everything about it. When it opens, when it closes, how much it's worth per point, what's the year high, low, all that good stuff. It will give you an immediate chart. So if you wanted to see a chart, daily, weekly, options, you name it, boom, chart comes right up. You can trade from that chart if you want. Just click and trade. It's a pretty cool system. It does so much. I worked on it for years. Oh, yeah. Spike, if he says anything like that, you better be long. Spike says, step down in policy that could see a rate increase of 0.5 point in December, in the December meeting, and a few smaller rate hikes in 2023. Anyone who says that is saying the bottom's in, right? That means that they're saying we're turning the music back on. I don't think we're going to hear that yet. NASDAQ is down 100 points from its high.
There's a wind?
Yeah, it sounds windy out there. So let's see, do we have the YM isn't on that board, is it? A mini Dow. No, I don't see it on that board. Let's see if I could add the mini Dow in over here. Unless it's here, just underneath. Add that in. Dow is YM. Oh, keyboard. Overthink. There it is. Up to 15. At least I can keep my eye on that board now. Josh has me live on his treadmill screen. I love it, Josh. It's great. So then if you're on a treadmill, what we should do is put this out. Look. We should do this. What kind of chart can we give you? Oh, you're on a treadmill, right? I know what to do. Let's do this. Give you a 1 minute chart of the S&P if you're on a treadmill. That ought to get your blood pumping. How crazy is that? Too bad 1 minute charts don't mean anything. I just want to see what that crazy move was in NASDAQ. This is a 1 minute chart of NASDAQ. It went from, what's this? when the Fed made that announcement, the low of the bar was 11,195, and it went up to 11,440. Wow, that went up 300 points. Go NASDAQ with the RTY do. YM. All right, what'd the dollar do? Exactly what opposite of everything else, huh? Interesting. That dollar is coming down today, kids. But it hasn't been an hour since they've raised rates. You gotta wait. We don't know what it's gonna do yet. I'm live at a jumbo screen in Times Square. Now that would be funny, Big House. You know what I do have? A completely dead phone. Drop it on the charge and see if it responds. So back down to 3880. 13,363 in the NAS. Still has room to do whatever it wants. Remember, we have to wait.
You need any?
No, I'm good, thank you. We are literally in a waiting game, kids. Just sit tight, let this board flicker, let it do whatever it wants. Another 35, 40 minutes to go. Wow, NASDAQ, soybeans would have continued paying us today. How about that? Look at that, went all the way up. We got out at 49, right? 14.49. How are stocks doing? Not real movement, nothing crazy here in the stocks. There's nothing jumping out at me at all. Nothing. We need to see bonds. Let's make that a little smaller. I like to see bonds at all times. Alright, now I can see my bonds. Alright, so everyone is waiting for the Power Press Conference. Absolutely, Oliver. Hi, Oscar. Do you find it important scheduled future red flag events? I find Forex Factory's calendar good for its free. Oh, I have a calendar on my site that gives me all that information, but thank you very much, Brandy. There's a spot on my site that gives you everything that's going to come out in real time, actually. And it's dynamic, so it updates every day. It updates by the moment. Let me see if I can show it to you. You could always go here. I believe it's in member help. Features, tools. There we go. Economic calendar. So you have an economic calendar here, which tells you every country, everything, what time. actual, what's expected, and what the previous was. So you could always come here if you need it and find out what's going on. It's a pretty handy spot. You're gonna you take a break for 30 minutes? So if you've never seen it, so here's what I did today on my site. Let me show you. I tricked everyone today. So today I told them this morning, or last night, today is Fed decision day. The Fed will be raising interest rates at roughly 2 p.m. on Wednesday. The Omni will sidestep all financial markets for trading on Tuesday, not Wednesday. But that doesn't mean I'm not allowed to trade soybeans. So without anyone knowing, I threw out a soybeans trade to my OMNIX, and we did all right with it. Let's see if you can read it. I don't know. The soybeans trade, which you may not be able to read looking at the screen. But basically, Omni gave us a pretty decent trade last night. So what it told us to do was, last price in soybeans is 14.32. The Omni says buy long at market, put your stop below 14.15. And then I offered the profit objectives once we were filled. So we're long down to 14.32. Last trade is 14.44.5. 45 is profit target 1. 14.49 is target 2. 14.55 is target 3. If you're taking profits at target number 2 at 14.45, cancel your stops once flat. It's target 1 actually at 14.45. So then, next flash that came out, luckily we had a winning day, not a losing day. And it says we are long at 14.32. If you took your profits at 45, remember to cancel your stop. And then finally, soybeans hits 14.49, which is Omni target 2. Take your profits at market, cancel stops, out of the trade. So we did all right in the soybeans, but generally what you'll find is on my site, I tell you what I have in mind on the left side. When you go to the Omni page, click Daily Omni. And then once I start trading, there's usually a chart down here too that will depict why I think what's going to happen. But being that it's Fed Day, I put Powell there. And then over here will be the flash updates as they start lining up. And the flash updates are cool because they come out like this as well. And on a Discord channel. If I send you a trade, it looks like that. And then it shows up, of course, on the trade site itself, which is here. And it shows up on a Discord channel, which is here. So I try to surround you with everything that you need if we do trade together. New York, huh? What's up, Ego? Puglisi, of course you're from New York. Bonds are timid, right? They're unchanged, up 10, I should say. Yes. All right, so again, we have a long way to go. It's only 2:29. Fed press conference starts in a minute. You still got another almost half an hour before we know, well, maybe a little more than half an hour before we know what the market really wants to do. Back to the highs in S&P, I see, huh? What did gold do? 17 bucks higher, huh? All right. Looks like we're getting started because my screen just lit up. Powell will be coming out there any moment. Hey, can you lower that TV? And we can hear what they're saying here. Is anybody in here to lower that TV? Oh, there's no one in the office. Let me go lower the TV. If Powell's live now, how come it's not showing up? Because we're watching the press conference. And there's no fast forwarding, right? No, it's as live as it's going to get. Here he comes.
My colleagues and I are strongly committed to bringing inflation. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American businesses. Stability on behalf of American businesses. Right, in particular, without price stability, we will not achieve a
Oh no, I gotta hear this. This is no good.
Anyone. In particular, without price stability, we will not achieve a period of strong labor market conditions that benefit all. Raised our policy interest rate by 75 basis points, and we can. Policy stands purposefully. That will be set inflation to.
I need another link. Does anyone have a different link? This is killing me. I need to hear this guy.
The size of our balance sheet. Restoring price stability.
Oh, you kidding?
Process of significantly reducing the size of our balance sheet. Restoring price stability of policy for some time. It will require maintaining a restrictive stance of policy for some time. More to say about today's monetary policy actions after briefly reviewing economic development. It has slowed significantly. Page rose.
Oh, you gotta be kidding me. This is so important to me.
At a pace of 2.6% last quarter, but is...
I'm shutting that one down. Maybe there's another one here. Great. Video will play after the ads. Wonderful. All right. This is Powell. Speak.
Job vacancies still very high and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs, and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food, and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy.
Very nice.
With today's action, we've raised interest rates by 3 3/4 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last 2 press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected.
Okay, that makes sense.
Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal.
That meeting by meeting is exactly what I was hoping he would say. Let this market continue to drop. It needs to drop.
A sustained period of below trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy.
We just missed it by 7 points to high in the NASDAQ.
To conclude, we understand that our actions affect communities, families, and
114.60.
businesses across the country. Everything we do is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Here's where it's going to get tricky, the questions. Let's go back to Powell for now,
the
though.
Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question.
Correct.
Guided by
good answer, buddy.
Financial conditions have tightened. The effects that that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So, what I want to do is put that question of pace in the context of our broader tightening program.
Say it data-driven, buddy.
And
say it.
Talk about the statement language along the way. So I think you can think about our tightening program as really addressing 3 questions. The first of which was, and has been, how fast to go. Second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3 3/4% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement. Because that really does become the important question we think now is how far to go, and I'll talk more about that. We think there's some ground to cover, but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last 2 press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, and it may come as soon as the next meeting or the one after that.
You didn't just say that, did you?
It is likely we'll have a discussion about this at the next meeting, a discussion.
Ouch.
To be clear,
that, my friends, is
again,
bullish. I'm sorry.
Of when to moderate.
That's very bullish what he just said.
Increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that.
That was very bullish if you're listening, kids.
Importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress.
I don't know why he would have said that, but whatever. Whatever.
I think I'm pleased that we have moved as fast as we have. I don't think we've over tightened. I think there's not a chance.
Keep doing what you're doing, brother.
Current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, as in the last 2 meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover what we will.
Love Oscar.
Nick Timmeros of the Wall Street Journal.
Well, he's already gone past that.
PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high 4s, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
How would you have that answer, Powell? You couldn't have that answer.
This is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. There are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't rely on any one assessment. There are many different, as you know, many different people publish an assessment of underlying inflation. Thank you.
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley with New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter term inflation expectations moved up between the last meeting and this meeting. And we don't think those are as indicative, but they may be important in the wage setting process. There's a school
Bonds are starting to go now. They're starting to show their hand.
I guess
bonds are starting to go. Look at your bond chart, kids.
We're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to the lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter, and the truth is we don't have a lot of data of inflation this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do? And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing that I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive, and we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting, a new summary of economic projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
Thanks, Chair Powell, Neil Irwin, Axios. As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of the labor market, consumer demand, a lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. So, sorry, was I getting to your question there? Oh, housing, the housing part of it. Yeah, so, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline, and you're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, and no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was
look
very
at what happened, kids.
Much more carefully
look at this board in the
managed by
background.
So
everything went red.
Doesn't present
Everything went red.
Doesn't appear to present financial stability issues, but no, we do understand that's really where a very big effect.
Told you have to wait. This is what I was saying. You can't do anything until it finally shows its hand. Then you can play.
I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers.
Pull up a 15-minute ES. Let me lower this. This is too loud.
To what extent you do and don't.
Where are you, Powell? I lost them.
So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus
All right.
on job
We'll listen to him in the background.
Are wages what's really empowering you?
So you wanted to see a 15-minute? On a 15-minute? Wow. Sick. Bonds. Very nice. I did a sneaky trade without telling my OMNIX because it was I was afraid to put you guys in. But last night I sold bonds at 120, 120, exactly where OMNI told me to sell them. So far, so good. I put you guys in soybeans. Don't be mad at me. I'm still short, by the way. We'll see what happens. I was looking at 30-year bonds. 120, 120 was my sell level, so I kind of tossed it out there when it got up there last night. It's up almost a full point. Well, profitable almost a full point. All right, so we were looking for the 37, 40, 50 area. I have a feeling that's what's going to happen next, kids. Let's go look and see what happened on these charts. All right, so we can take away that flag. It's not what developed, right? We can put everything back the way it was because it's exactly, we called it correctly as we should have. So let's go to the Dow chart. And that was on a daily. And that was a DJIY chart, if I remember right. Boom. Yep, it did exactly what we had talked about all week. Look, failing at that spot. And this is why I kept showing it day after day, because that kind of is the pattern. So far it is doing what we expected. This was a Wall Street setup. How about that, kids? We got that one right if you watched the video last night. And dollars, let's see what they did, because that's a little bit of a wild card right now, the dollar. I think we had a dollar chart like here, maybe? Hold on, maybe dollars were here? No, we had a dollar chart somewhere else. Maybe it's here. Uh-oh. Uh-oh. This is not a good sign. Oh, there we go. Now let's go back to the weekly. And this is exactly what we were expecting, right? It's another thing that we spoke about. Now it's green. That was red earlier. They ran dollars down right into the Fed meeting so they could run them back up. And they ran the stock market up right until they could run it back down. Nope, wrong chart. 17, 4 is DJTY. Oh, I see. Go to daily. And let's go here. That's not what I wanted either. Where's my chart, kids? It's missing. Couldn't have been here. No, it had to be here. What happened to it? Ah, there we go. So yeah, that's it. That was a good old-fashioned setup. And in fact, we were on that because if I remember right, let me go find something. I think that's exactly what I called last night's video. Let me look. I think that's what I titled it. Content. This was the title of the video last night. See, this was the title of the video last night, kids. The falling axe pattern, huh? Don't say that too loudly. Well, thank you for saying that, Stephen, about throwing some likes. I appreciate you. All right, so Powell's still speaking, but he basically said the gist of what we needed to hear. But you know that one statement that he made about we'll see at the next meeting whether or not we need to raise as much. That's more bullish. You watch next week, they're going to come in and think about that, because that's more bullish than you think. I heard that as something that means possibly they're not going to be raising as much at the next meeting. All right, keep going down, bonds, as you told. White balance. Let's hear a little bit more of this for a moment.
Is there a risk that some of those prices simply don't come down?
We don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have strong, in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So
you hit it on the head about energy,
buddy.
buddy.
Are well suited to work on that problem. That's what we're doing. You're right though. We don't, you know, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep you know, longer term inflation expectations anchored. The public believing in 2% inflation by the things that we do, even in times when energy is a part of the story of why inflation.
Robert, I think that's bullish news, Robert Leakey. I would take that as let's start setting our funds up towards these rate hikes are going to start to taper.
So the Fed is facing 2 more ethics-related incidents with the revision of the financial statements from President Bostic and
well, that's absolutely true, Terry Nash.
So,
Joe is not going to open up the spigots anytime soon.
However, sign of greater ethics problems at the Fed.
All right, so we just heard what we needed to hear. That was an inflation question. That's why I pulled them over. That was about oil. So we don't need to keep hearing all of that. If the Republicans sweep, which, you know, okay, if you look around with the naked eye, it looks like Republicans are probably going to take over. But, you know, there is a thing that, starting with the Gore-Bush election, one side had the cheat codes, then it seemed to get back to even, and then it looked like maybe the other side had the cheat codes for the, possibly, for the Trump election, which made them even, right? Republicans started it, Democrats came afterwards. If there's no cheat codes going on, if we're all even now and everybody just lets it even a level playing field, without the cheat codes, I think Republicans will take the House and Senate. And if that's the case, I think oil will drop, and I think a lot of things will start to straighten out. Now, Powell said something a few moments ago. He's right on. He knows, I mean, of course he's Powell, right? Knows better than all of us. But he was right on when he said really the world's problem with inflation is energy. It's absolute, and we are the hoarders of it. We are the worst country on the planet that produces oil and is so damn stingy with it that we won't end this inflation for the rest of the world. It's the worst thing I've ever seen, and blame us for sure. It is absolutely American policy making this happen to the rest of the world. But we can't control what the president does, you know what I'm saying? There's nothing we can do to control what he does. And he thinks that, in his view, oil has to go away and electricity has got to be big. All right, that's his view, but it is really hurting the rest of the world, even more so than the United States, because during this insane inflation, especially with energy, our dollar has gone up. The rest of the world's been getting destroyed watching that oil go up while their currency goes down. It's so wrong. I apologize to everyone else in the world that our country's doing this to you. It's wrong. I am on your side. We are absolutely wrong for doing this to you. I can't do anything about it, though, kids. We're traders. All we can do is trade out of this, right? I mean, what can we possibly do? You can write a letter, but can the guy even read anymore? I mean, I'm not trying to make fun of him. Just the choices that I've seen made lately don't make any sense at all. So I just don't know. Oh, it's destroying Europe for sure, Hans. I feel really bad. I promise you I would never let this happen to my friends across the pond or any other country if I could do something about it. You know, what we could do is spend 10 years rebuilding electric infrastructure while spending those 10 years convincing people to slowly move over to electric. Then after that, spend another 10 years giving people huge incentives, now that we've rebuilt our electric grid, to move out of gas into electric. That is how this should be taking place. And we'd have way less inflation because the price of oil would be cheaper because gas would be flowing. The fact that they're trying to do this insanity today, I mean, they're just blowing up the rest of the world. It is so unfair. We are so selfish for doing this to the rest of the world. It's just wrong. But you must realize, if you're out there listening, I don't think there's a single American that would do this to the rest of the world on purpose, except for the guy who's doing it now. I can't see anybody else in office doing that. And I don't, I'm not blaming any political party, because it could be any president up there doing that. It happens to be our leader right now is not doing the right thing for the world. So it's sad to watch. I mean, again, it'd be nice to brag and be proud of our country, because we can be in 1,000 other reasons, but not what the president's doing to the rest of you cats. I mean, there's nothing to brag about here. We almost have to put our heads down and apologize, which I have done on video many times. I am sorry, world. We shouldn't be doing this to you. You do realize that literally true statistics have proven that we probably have more oil here in the United States than any other one country, Saudi Arabia, anywhere in the Middle East. One country at a time. They have found that we probably have more oil than any one country that you can put us up against, because there is a sea of oil underneath Nevada that has been located about 4 years ago. You can look this up. It was a company out of Israel that called themselves American Petroleum, maybe 5 years ago. And they came to the U.S. and said, you guys are looking for a sea of oil. It could have been a little bit longer than that, but I promise you this is factual. We know where it is. If you give us just a couple of $1 million, we'll come right to the U.S. and point it out to you. And the U.S. said, okay, whatever powers that be, gave them the money. And this company came out of Israel, came to Nevada and said, look, you have an ocean of it underneath here. And we do. Untapped, no one even talks about it. On top of everything else that we know. We have that much of it, and you're not allowed to have it in the rest of the world. So anyway, that is absolutely true. Look them up. American Petroleum out of Israel. Find out what they've discovered here in the United States. Now, that's out of complete memory, but I usually can remember this stuff verbatim. Anyway, let's go back to what we can control, and that is what we trade, how and why we trade it. That is ugly. All right, so what else has happened here? This was, what average was here? Let's think about that. That was let's go see what's there. What kind of average was sitting there? Was it a 50? We had an average sitting there because I've got circles going through them, and that wouldn't be it. What average was sitting there? Well, this guy could have been the 100. Let's see. There was a certain average that sat on here. I made it orange one day because it went through all those little circles. Could it be the 200? I wouldn't expect it to be that far out. I don't know what was there. I had an average that went through these 3 circles, but I don't know what I used. This average is for the dollar. This doesn't belong here. This is what the dollar's using. All right. Anyway, that'd be the 200. I didn't care about that anyway. What I wanted to do is start to see what's going on here. So let's get rid of this. Let's get rid of this. Let's just take a look at what we just witnessed. Okay. Short term, we just fell out of this. Short term, we just fell out of this. which was building nicely. Slightly longer term now, you've got to come down to this. And if you want to look at something else that got interesting, look what it did. Couldn't get past that last peak. Let's remove this for a moment. Look at that. And then I see another one here with the naked eye. There's something happening here. What is this? Nah, I don't know about that one. Anyway, I just figured I'd look and see what looks like it's coming next. Now, Powell didn't quite say he's thinking of slowing the pace. He said at the next meeting, of course, we'll discuss whether or not we need to continue at this pace. But that is sort of the same thing, if you ask me. That's sort of the same thing as pre-warning us that they are going to slow down on interest rate hikes. I think, kids, that's bullish. I think by next week, you're going to see this go up because of that statement. Technically, you see how weak this is, and it's got to go down. I think when it finishes this little down spurt, because of what he said, I think banks are going to start to plan for that. I mean, why wouldn't you? He just basically let a little bit of a cat out of the bag. I mean, literally, if I was sitting with a group that handles a large pension fund, that would have really caught my attention. I would be hounding the group right now to go over and listen to that again and see if we don't think he's trying to tell us something. And I think I would start considering that Powell is starting to tell us something. Next meeting, we're going to find out for sure. Now, I promise you, I think he's way too soon. I think we need way more pain. He should push this thing down way further before taking his foot off the brakes. Personally, just from watching for 41 years, if you're going to do it. Do the washout, get out all the dead wood, all the weak hands, start fresh. You don't go halfway down and then give up. You know what I'm saying? It's not the thing to do. You got to finish the job. My opinion from watching since I'm 18 years old. Let's see what this question is.
You're thinking about the future.
You know, it's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects. Although I think overall, I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that our job is going to require some resolve and some patience over time. We're going to have to stick with this. That's just we take all that as a given, but we know what our objective is and we know what our tools can do.
Okay, and, that sort of quells what he said earlier. That sort of evens out that other statement. I'm glad to see him say that.
Hi, Chair Powell, Nancy Marshall Ginzer from Marketplace. I'm wondering, has the window for a soft landing narrowed? Do you still think it's possible?
What would you call what we've had? A bad landing?
Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to...
Does anybody feel like we've had a really, really difficult time in our economy, barring gasoline and Oreos, which don't have as much fluff in them anymore?
Yeah, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path.
All right, so if you are American, do you really feel anything at all since this all started, except for at the pump? Americans, have you really noticed any changes at all for us, barring the pump? Shrinkflation, yes. My son opened up Oreos last night and goes, Dad, look, there's like nothing in them. And he was right. Okay, but how bad is that? I mean, have our lives been ruined over this? Absolutely, right? Absolutely not. We have barely noticed it. In fact, because we're traders, we pay more attention, so we see more of it. But as an American, has this really changed your life in any way? Not really, right? You pay a little bit more for your food, not too crazy. We're paying more for our gas, not $20 a gallon. And everything else is normal, right? Not much else has changed. It's not so bad, kids. How do I follow nuclear fusion? Chatter is scientists working on it again after some setbacks. That was literally 70s, 80s, stopped in the 90s, Robert. I don't remember hearing much about it after the 90s. I think because it's so dangerous to get to that level of, let me see if I remember this. You have to be at scientific level of freezing minus, I don't know, 100 degrees, less than that even, in the minus category, below freezing, below zero, that is. And you have to have that environment in order to get those super reactors to operate. Well, how do you do that in a real application, right? How do we keep temperatures like that? Powell is done. Thank you, Powell. You didn't do anything too crazy. You didn't say anything too insane, buddy. Thank you, thank you, thank you. So yes, I've noticed a little bit of shrinkflation, and what they start to do is the potato chips don't get smaller. They fluff the bags with more air, and you get less inside the bag, is what I've noticed. But yes, we're getting some shrinkflation, but if you put yourself in Africa and you're the child, third or fourth child of a really, really poor mom, or your mom and dad even that have a hut, what the hell is some shrinkflation? Is that really bad? Are we really suffering here? We've had some shrinkflation. Us Americans are getting hit so badly. You know what I'm saying? I mean, we can't cry about this. We have been blessed with that higher dollar. People with fixed incomes, yeah, I'll bet they're feeling it more so. Absolutely, Paul. Absolutely. Oh, I'm not denying this at all. What I'm saying is, as much inflation as we've seen in the U.S., you guys around the rest of the world are getting slaughtered with inflation. So that's why I'm saying, Americans, stop complaining. If you were anywhere else in the world, this would be way worse. Me, except gas, I haven't really noticed anything more than my wife spending a little more money at the supermarket. Okay, well, you know what, Marv, it ain't your fault, not my fault, it's not anybody's fault. Where your station is in life, ain't nobody else's fault unless you put them there. Don't be putting that on us. I don't care. You know what I'm saying? Yes, people have problems. There will always be people with problems. But, I mean, I grew up as poor as the day is long with absolutely almost no chance of being the person I am today. Everybody's got a chance in this country to do what they can do if they try. So, yeah, Marv, certainly people that aren't as affluent as us on this board are feeling it worse. That ain't my problem. I don't care. I mean, I do about them personally, but it doesn't make me feel bad. It is what it is. I work very hard to be who I am. I put 20-hour days in until my fingers hurt, until my legs hurt, until my brain hurts every single day. My whole life. I work hard for this. Other people can do the same, I promise you. Heating oil has tripled. Yeah, I don't know what to say but sorry when it comes to stuff like that. I don't know what to tell you guys. My apologies. It doesn't have to be there. Help us at the next election make it so apparent that whoever we voted for, that they couldn't possibly argue it, even if the votes come out wrong. You know what I'm saying? Help us next time with this next presidential election to make sure that so that the popular vote wins. You know what I'm saying? That's what we need. Look at the US dollar. Well, let's see which board do I have it on. I've got it all over the place. Let's go look at the chart itself. Very slow to load charts today. Well, that dollar is just starting to go, huh? Now look, let's look at it in something I would never really do in my real life. We'll look at it in a 1 minute chart. That dollar is starting to go, kids. And you would think if dollar is starting to go, so would bonds, right? Why aren't bonds going the other way? They should be. Okay, that makes perfect sense. I'm about to make a new low for the day. Well, that's good for me. Traders, please don't take this as an example. I never, ever look at charts like this. Because today is a day that we've had such vast movement, I thought I would show it to you guys because it looks so cool to see. But please don't think I use these type of charts. I use daily charts. I don't go near minute charts. I don't want to know anything about them. I think I lost the chat room, kids. I don't know where you guys are. Did I lose the chat room? I did. I lost the chat room. Yeah, man, my chat room's gone. I gotta bring it back up. Look, it went away. I'll show you how I get in my chat room. Now you can see how I do this. It's so simple. Click. Click again. Say okay to my camera, and I have joined. So, I don't know what just knocked me out. Maybe somebody opened up my laptop inside, made me come live somewhere else. So I'll just try to rebuild what we had here. Which way is Nevada going? Well, if you look with your eyes, there's no shot on the planet that it's going Democratic. But we don't know if they have the cheat codes or not. We don't know what this election means, right? All we know is that we have our election, our voting machines. Look at this, I got disconnected again. How about that, huh? Somebody's disconnecting me. Somebody's cleaning in one of my offices. I promise you, that's what's going on right now. And they're moving my laptop around. Let me get back in. All right, where are we? OMNI chat. Let's try it again. Sorry, kids, but this is Live with Oscar. Remember, I told you that. Everything that happens with me happens with you. It's Live with Oscar. It's like living with me. All right, let's try this again. Let's do this again. So anyway, that question about which way is Nevada going, I have to be honest, it should go Republican by speaking to people. Doesn't mean it will, but when you speak to the average person around you, it should. I mean, from what I heard, New York should go Republican, just listening to what other people say. Well, listen, if you're a Republican fan, you want somebody like Fetterman in the race, don't you? What are the odds he gets voted in? However, if they have the cheat codes, he'll win. So I mentioned already, here's how this is going to happen. I promise you, this is exactly what will happen. If, in some way, shape, or form, one side has the cheat codes, what will happen? Oh, God, I'm gone again. You got to be kidding me. All right. There's only 3 offices where this could be going on. I don't see myself opening any other windows, so it's not me doing it to myself. Right? No, it's not me doing it. All right. Sorry, kids. We'll try this again. I keep getting knocked out of my own trading room. Now this is getting boring, this routine. How many times do you need to see it? All right, Oscar, we get the point. We know how to get to your trading room. Sorry. You go away. Yes, join. And we'll try this again. We're back. Your confidence in the electorate is not very high. Well, here's what I think. As I mentioned, if they have the cheat codes, then basically the Democrats will win by one vote, one senator, one governor, one. They'll win by one. This way it doesn't look obvious, and everybody who thought it looked like the Republicans would win will say, well, all right, they only won by one, maybe. Maybe they didn't cheat. So that's what they'll do. They'll just eke it in. Because in reality, if you use your eyes and look around, there is no shot Republicans aren't getting elected to the point that they should be the majority. That's what we see. What will come out of the voting results, whatever happens in this country, I do know this, our voting machines were made in Venezuela and they were programmed from Chinese. Whatever that means for our voting, whatever you think is going to happen when they start counting, know that those are facts. From there, it is what it will be. The election will be what it will be. You can, whatever you want to draw from that, you draw your own conclusions. But that is true. You can look back at those facts. I never just make stuff up. We had our machines made in Venezuela, and I think the Chinese programmed them for us. Go look it up. Couldn't have been innuendo or rumor because I remember reading about it too often when it was happening. $37.92. Traders, what price did I tell you we would get to today, if not tomorrow? $37.30.40, right? We're on our way. Now, did we go short? No, because I don't trade on a Fed day. But I am short one little bond. Just one. And we are making new lows. Hooray. In bonds. All right, I got to go look at that board for a moment, guys. It's really hard for me to not watch this. All right, let me at least stare for a few moments. So gold dropped from 73, made new lows at 39. Silver got hammered. Bonds got hammered. Bitcoin, it's down only 200. That's not so bad. Ethereum down 40. Dollar making new highs is going to scare this whole board down. Anything not closed will end up lower today at some point, even crude. Well, damn, go bonds. Love you guys. All right, let me check my profit objectives on bonds. Let me see what my profit objectives are. How do commodities react on Fed days? Well, commodities are priced in dollars. And if the Fed raises rates, it makes dollars go up. And if dollars go up, right, dollars up, should make commodity price things go down. And gold, I mean, gold had a great short setup. So that looked like it. I didn't put it in the video last night, but it fit everything else. What was I just going to look at, kids? You knocked me off. You knocked my train of thought for a loop for a moment. What was I just about to look at? Oh, profit objectives and bonds. I expect 118.22 in 1 to 2 days. That's my only target. 118.22. Come on, I don't like holding stuff overnight. Don't make me hold overnight. I'm not holding it overnight. I don't hold anything overnight unless it's real estate. I don't need to wake up in the morning and find out that Biden was sucked out of his bed by an alien beam from Mars, and you know what I mean? I'm down $100,000 on a one lot. I just don't like that. It happens to a lot of people. So if it goes low enough, which it should be somewhere like 119.26. I remember that in my analysis last night. I'll bail out there. In fact, I'm going to put an order in there. 119.26. Just give me 1 second. Throw an order in. MIT. Wow. Let that percolate. I would think, yeah, Kent, the markets would go, no. Think of the alternative. Guess who the president would be? We'd dig a hole so deep, we'd end up in China in our markets. Yeah, the dollar had a lot to do with my decision making today, CryptoCat. Absolutely. That's why you seen it in last night's video. You know, if you watch the videos, I basically, in layman's terms, are telling you what I'm thinking. Now, that's not exactly how I analyze, you know, it's not the OMNI, which I'll never show in a video. That day will never come, not even if you put a gun to my head would I show the OMNI in a video. But the analysis I show in my videos, it really kind of tells you what I'm expecting. And I'm a pretty good chart reader, right? So it tells you what the graphs say to a much higher extent than if you get that opinion from anybody else. A lot of people think they can read graphs. Nobody can read a graph like me. You guys know that. Nobody can read a chart like me. Well, I've been in this since point and figure charts. I literally started with pencil and graph paper and taping them together and rolling them up and watching the markets. I've been through this entire gamut. I helped them become, well, I was a computer nerd before there were ever even computers out. I met the girl I'm married to now, Lisa, my beautiful wife. When I met her, we were 18. Now, this, you have to understand, this is 1982. There are no computers yet. They're not sitting on desks. No one's got a laptop. There are no cell phones. None of this exists. Bill Gates hasn't come down the pipeline yet. And when I met Lisa, first thing we did on a weekend was she programmed zeros and ones for me for hours on end for like 4 straight days so I could create a program that would actually run on my TV. But it was a computer program, and it would make a ball drop through some switches. I was into computers before there were computers, right? I went to school for I went to college for computer programming. So I was a computer nerd, and I became a chart nerd. And then my chat room went away once again. Then the computer came, and I went, oh, now I can take these charts and I'll show the exchange how to put them on computers. And I flew all over the country and helped people all over the world get charts on computers. And man, I've been here for the whole damn gamut. Not many people can read a chart like me. Shout out to Mr. John Murphy. He was my first professor. I love him. I've always loved Mr. John Murphy's teaching style. He was a great teacher. Fantastic teacher. I went to the New York Institute of Finance and took his course for a long time when I started on the exchange as a kid when I was 18. Is it back? Is the video back? Because I keep getting knocked out of the trading room. So what's going on right now is we've got people at OmniCamp 2, and I have laptops there that have me. So what happens is if they're cleaning and they hit any buttons and they light up a laptop, it automatically boots me out of this room and puts me live in that on those laptops. So that I'm assuming the girls are cleaning and they keep knocking me out of the trading room. That's all right, though. That's a good reason. I can't complain about that. And the girls at work are fantastic, the ones that work with us. They keep OmniCamp beautiful. All right, 120.04 in bonds, new low. So we were talking about programming is correct. So as a programmer, I literally went to the exchanges. So I had like the Commodore 64. I had the VIC-20 before the Commodore 64. I had the TRS-80 from Radio Shack. And I had something called the Franklin Ace 1000. Look that sucker up. That was before Bill Gates and before Apple. The Franklin Ace 1000 is what I started actually programming on. A friend of mine, Wayne, who was a computer genius in many fields, taught me how to use it when I was a kid. So I basically took the charts, brought them to the exchange and said, listen, here's what I think. I think these should be on a computer. And I'm really good at analyzing these on pieces of paper. But you got to recognize at the end of a piece of paper's life, it's a graph paper. It ends here. You have to use tape, literally, Scotch tape, and another piece of paper and tape them together and then continue on. So if you tape two pieces of paper together, if they're off by a fraction, even a fraction, if they're off by that much, all your trend lines are skewed and you no longer can use the chart to analyze. So that had to be changed. You know what I'm saying? That had to be changed. So I helped every programmer or every programming company that I could get in contact with. And I would say, listen, if you want to write something, some software that would put charts up, and boy, I have literally done that from the beginning of then all the way through TradeStation 2000 when that came out and went on the internet. I helped, but I was there before anybody else doing it on point and figure and showed the industry how to get it where it is today. So I got this down, kids. I promise you. I'm not going to be right every day, but I got this, man. Nobody's got the knowledge I have when it comes to this stuff. Now, the one thing about being a day trader is it's impossible to get every trade right. It's just not possible, right? Oh, gone again. Stop cleaning at OmniCamp. You're killing me, people. Let's try a different browser this time. Come on. Let's maybe, just maybe, if we pull up a different browser, that'll stop. Let's try a Chrome browser instead. We'll log in with that. This is getting annoying. And of course, you can't see me logging in because you're not getting my passwords. I'll pull it over once I log in. Oh, that's not it. Where do I want to move over here? This is what I want to move over. All right, let's try this again, kids. Different browser, maybe somehow it'll help. All right, let's try number 5 or 6. Yeah, the keyboards have to be clean by now. All right, and I have to, oh boy, it's going to get a little tricky. I have to plus this, and now I'm not going to be able to read anything, but neither will you unless I control plus it a couple of times. All right, can you read that? Or do I need to go one more? Okay, that makes my camera go away. All right, so let's get reset up. This should be legible now for you to read. And I should have a camera 2. Let me just back the camera off a little bit. All right, we're back to where we were. Now, if I get rid of the room list, we'll be able to see more of what you guys are writing. So I'm going to get rid of the room list, kids. Nobody will see your names unless you type. All right. More people are watching, listening to... Oh. I can't repeat that, crypto. That's not true. I thought you were giving me a fact, but thank you. I appreciate the vote of confidence. Now, I keep hearing echo, which means I'm watching this room, and I'm... there we go. Let me get rid of that echo. I was actually watching the room on another machine where I had the overhead camera, which we really don't need, so let me just get rid of that because it just eats up bandwidth. All right, and I get knocked out again. All right, I'm never, ever cleaning that office again. No one's ever allowed to clean OmniCamp again. I made everything so big. It's either that or it's the wind. It's really windy in Vegas right now. Sometimes the Vegas wind will do this to our internet. Aha, we're back. Sorry about all the turmoil here, kids. Usually it's a steady ride, but it is what it is. At least we get to hang out with each other. All right. Obviously, they don't want me in this trading room. I'm not allowed to be in the trading room, kids. New laws have been made. Maybe we should end this stream. We're starting to get some omens here. All right, if this happens again, everybody just join me in the YouTube and we'll talk there. Oh, you know what? Without this chat room, I don't know if you guys hear me. So when the chat room's down, are you still hearing me on YouTube? Can you help me out with that? When I was rebooting the chat room, were you able to hear me still speaking on YouTube? Oh, okay. That's interesting. So I don't need this up for you guys to hear me. So if this happens again, we'll just hang out in the YouTube room because, you know, how much work do I have to do? How much work are you going to put me through, chat room? Thank you, everybody. Appreciate the answers. All right, so let's go once again. Let's go look at how the damage that's been done on these charts because there. Oh, wow, look how close it's getting to that line already. You know what? When we looked at this before, I kid you not, that red line was only about, look. When we looked at this before, today's bar was only about this big. Remember, we were just falling out of the flag? So it was only about this big. And in the last half an hour, 40 minutes, that grew. Look how close it's getting to the support already. Let's go see what the Nazi looks like. That's ES, by the way. This is nothing. This is me making fictitious bars. All right, let's get rid of anything on here and see what we got. This is NASDAQ. Let's start with a fresh chart and just drop some lines on it and see what we got. Oh, that's not right. What is that craziness? All right, so NASDAQ daily, being that we're having a tumble here, let's go see what's going on. All right, so that speaks for itself right there. It doesn't fit down here, so we'll just leave it up there. All right, so 1, 2, 3, 4. 1, 2, 3, 4, 5. You had six attempts to get above that resistance. It tried really hard. All right, 6 tries before it failed. So now, what is it doing? Now it is, being that this was a rally, we'll start this way. That's not correct. Goodbye. That is not right. Let's start down here instead. That's probably more or less what's going on here now. So let's look at that. I guess the easiest thing to do is put the flagpole here. Was it 4 or 7? Yeah, I think it was 4. Here's what we need to do. We need to put the flagpole here. Watch this. Nope, transportation average. That's a better chart. It's this guy. We need to put the flagpole in. Here's what we should be concentrating on. So this is Chart Masterpiece. This is telling us everything we need to know. So let's go here. All right. So this channel right here, this red channel, if you recall, I had mentioned that this channel was likely a flag, and I left the flagpole there. I'm just going to make it bigger now. So that is what it is. And if you try to look past all the other voodoo on this chart, let me just move some stuff out of the way. If we look past all the other voodoo on this chart, you'll recognize that this black average has been programmed into algorithms. And they know when you get above it, you run. If you get below it, you crack. Fail, crack. We finally get back to it, and it cracks. So far, right? So that tells me that this whole piece is not just an upward channel, it's part of a flag. So I have now put the flagpole in place, and it's very likely that the rest of the market will follow the transportation average down to the bottom of the flag. And of course, that has been what it's done. It's just repeating patterns, right? Start somewhere near the bottom of the flag, top, bottom, almost top, bottom, top, hits it a bunch of times. Towards the bottom is the likely event next. So that is the chart masterpiece. This is what we should be paying attention to. That is your transportation average. It's basically been the telltale daily chart since this began. All right, now how are we going to find that crazy chat room, or is it gone again? Is it gone again? Dear Lord. I'm sorry, kids. This is the worst performance I've ever seen this chat room have. 15 years it's ever been this flaky in one day. Wow, a lot of people left because it keeps dropping out. Sorry, kids. Sorry, kids. Disconnected, just like that. All right, then. How about we stop with that nonsense? All right, traders. So I appreciate you tuning in. CryptoCat says, yeah, we're lucky to have him. Not his online presence, but that he replies to us, too, in real time as well. Maybe he continue to be with us for decades and be in good health. Thank you, CryptoCat. Love you, too, brother. Much appreciated. Thank you for your kind words. That being said, how about we gander at the chart one last time? This is what to expect, kids, so get ready and position yourselves for it. And thank you so much for tuning in, and good luck trading out there. I'm sure I'll end up doing a video tonight on YouTube. Please make sure that you come to livewithoscar.com if you want to hang out with me in my live trading room. CryptoCat, thank you so much. I really appreciate you, brother. Everybody else tuning in, I thank you so much for tuning in. And you'll find me at Live with Oscar and, of course, in tonight's YouTube video. All right, traders, I'm going to sign off for now.